Right, hi everyone. Welcome to today's webinar brought to you by IC Markets, where the topic is going to be multi-time frame analysis. Just want to make sure you guys can see the first page of my slides, as well as the audio is all loud and clear. All right, okay. I see most of you have already signed in. That's great. We'll just wait just a little longer before we start. All right, just I want to make sure you guys can hear me loud and clear. And do take note, I've got the Q&A box as well as the chat windows all open. So should there be any questions along the way, do not hesitate to drop them in the relevant chat boxes or the Q&A box. All right. Okay, everything looks good on my end. All right, okay. With that, let's not wait any longer. Let's just kick things off since it's already 5:30. All right, I assume all of you guys can hear me loud and clear. All right, great. Thank you, Danushka. Awesome. All right, okay, let's start things off. Right. Once again, welcome to today's webinar brought to you by IC Markets Global, where the topic's going to be, where we're going to be looking at the topic of multi-time frame analysis. Right, okay, as usual, let's quickly go through the disclaimer. Right, do take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, do take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right. My name is Ketan Ramachandra. I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so here's the agenda for today. All right, so we'll look at the introduction into multi-time frame analysis and which time frames or which is the most important time frame, and then we'll take a look at adopting a top-down approach and why is it important. And then we'll also look into zooming into the lower time frame, in which corresponding time frame should you use when trading in the lower time frames, right? And of course, we will end the session by looking at live examples for examples on the dollar index and any other currency pair that you would like. All right. Okay, so which time frame is the most important? Well, first of all, what is multi-time frame analysis? Well, basically it's a trading strategy that involves analyzing the market using multiple time frames, right? So this can be for any Forex pair, commodity, or even the indices, right? So as long as you're performing your analysis on various time frames, then this is a strategy that adopts multi-time frame analysis, right? In general, this is a good strategy for beginners, but it's also something that seasoned traders should continue to use, right? Because by adopting or using a multi-time frame analysis, it helps us to capture the bigger picture. Basically, it helps us to identify the major trends. Now, this could be a long bullish trend, a bearish trend, or even sideways trading, right? Or sideways ranging. Right, so this can help any trader get a better understanding of how that market or that instrument is currently trading and make more informed decisions. Right, the first step in this strategy is to select the time frames to analyze. And as you remember, the second part is about adopting a top-down approach. So naturally, the first strategy is to select the higher time frame. Right now, just in general, if you are a scalper and you are trading using the 5-minute, 1-minute chart, 5-minute chart, 15-minute chart, then you need something a little bit higher. So then perhaps you would use the 4-hour time frame or the 1-hour time frame to identify the main trends. Similarly, if you're more of an intraday trader, perhaps, and you use the 30-minute and 1-hour time frame, perhaps you should be using the daily time frame to establish the trends, right? Just a quick example. We'll go into more details as we move down the slides. Right, okay, so typically traders will choose at least 2 time frames, right? One is a shorter term time frame, for example, 15 minutes, and the other one would be a longer term time frame, which could be either 1 or 4 hours, right? Okay. The shorter time frame is used to identify the most recent trends and price movements, right? So this is important for scalpers, right, and intraday traders. The longer term time frame is to identify the overall trend and market direction, because of course along the way, right, in a strong bullish trend you can get pullbacks along the way, and conversely in a strong bearish trend you can get retracements to the upside as well, right? So this is what we mean. Like the longer term time frame is used to establish the overall trend. Now this could be an overall bullish trend or an overall bearish trend, while the shorter term time frame is used to identify the most recent trend. So for example, now of course we'll go through the charts and look through it, but just to quickly run through it here. Oh, hang on. Just let me get something. All right. Okay, I'm just going to get my pen. Sorry, apologies. Just trying to get my pen setting here. Right. Okay. So let's just say we have a trend like this. So the overall, you can see this is the longer term time trend, right? But along the way, you can see pullbacks occurring here, right? So this is what the shorter time frame is going to be used for. The shorter time frame will be used, for example, highlighting this type of pullbacks in the overall bullish trend. Conversely, when market moves down, of course, you can see that the overall trend is down, right? So that's what the longer term time frame will be used for. And the shorter term time frame will be used to identify the retracements to the upside. Okay, so this is just, I wanted to quickly just highlight that. Right, okay. So then once the time frames are selected, we will then try and analyze the market in each time frame, looking for key support and resistance levels, trends and patterns, right? So this could be a bullish channel, a bearish channel. This could also be ascending trend lines, descending trend lines, head and shoulder patterns, and so on and so forth, right? So just a simple example, if we perform our analysis on the shorter term time frame, let's say that's 5 minutes, and the longer term time frame we'd use 30 minutes, for example, and both of them indicate a bullish trend, then this is potentially telling us that we have a very strong uptrend in the market, right? Okay, so of course, by analyzing the markets in various time frames, it allows us to make more informed trading decisions, right? Because if we see on the longer time frame, this is a strong bullish trend. However, on the shorter time frame, we realize that price is actually pulling back, right? Then we can use this information to identify a suitable buy entry position, right? So that means you're going to be waiting for price to pull back, perhaps to support level, a major support level, or perhaps even a Fibonacci retracement level before identifying a buy order, right? This is how we can use that information to make more informed trading decisions, right? Just like this example here. So if the short-term trend is bullish, the trader may look to buy on dips or pullbacks in the market. Conversely, if the longer-term trend is bearish, the trader may look to sell or short the market. Right, so overall, multi-time frame analysis can help a beginner trader to get a better understanding of the market and also make more informed trading decisions, right? Because basically it helps us to look at the overall picture, the bigger picture, to analyze major trends and patterns, right? And this is not something, it's something that beginner traders should definitely use. And for more seasoned traders as well, you should continue using it as well. Like for me, myself personally, right, I always like to start with like the weekly and daily time frame. I really like to start with a eagle eye view of how the market is currently trading, or rather how the instrument is currently trading. Right, so I generally like to start with a weekly and daily time frame to establish the really long-term trends, and then of course scale down accordingly, right? So even for seasoned traders, it is something that we should try and do every day, so that we are able to analyze the longer term trends much more efficiently. All right, taking a top-down approach, right? So once again, start with the highest time frame, and then for me, that would be like the weekly or the daily, and then use the 4 hour and 1 hour after that, right? But for example, like if you're intraday trader or a scalper perhaps, right, if that means you're probably using the 1 or 5-minute time frame to trade, then perhaps you should be using the 30-minute or 1-hour time frame to identify the longer term trend, right? Then of course we try to identify the key support and resistance levels, because this will help us to identify potential entry points. This could be for the ups, for long position or short position, and of course it can help us to identify exit points as well. Then of course you gradually move down to the lower time frames and try to look for the intermediate trends or the shorter term trends. Right. So by having a multi-time frame analysis, right? Multi-time frame analysis, it helps us to fine-tune entries and exit strategies, right? So for example, in the case of a longer term uptrend, right? You can see that obviously the price is going up here, but if you enter here, perhaps let's just say you enter here as price is pulling back, but actually prices continue to pull back even further once we have identified a support level. Basically, in this case, it could be, in this example, it could be a case of getting in too early. So that's what we mean, right? So overall trend, we know it's a bullish trend. However, in the shorter term, price is actually pulling back. So do you really want to enter now, or would you like to fine tune your entry, right? So that's what the shorter time frame helps us to do. Similarly, we're in a strong bear market, but now we've come to a point where the price is retracing higher, right, before resuming the downturn. So similarly, as price is retracing higher, right, do we want to enter the position now, a short position now as price is tracing higher, or are we going to wait for price to stall and then reverse to drop lower before putting on that short trade, right? So this is what we mean by fine-tuning the entries, right? It works both ways, of course, for the upside and for the short side. Right? And of course, exiting the strategies as well. So when we use the lower time frames, perhaps we're able to identify uh, a level that's much more precise for us to exit. Okay, so that's what we mean by fine-tuning our entry and exit strategies or points, right? Entry points, exit points. All right. Oh, what's going on? All right. Okay. Then, of course, as usual, with this is just a recap of what we should do in our daily approach to trading, right? We should always maintain a proper risk management framework and position and size our positions accordingly, right? So depending on your account size, then we should use the appropriate lot size without over risking on each individual trade. So that's what so there's obviously everyone has to adopt proper risk management and position sizing so that we do not hurt ourselves, right? When the trade goes against us, right? If we size our positions incorrectly, our trades incorrectly, and it does hit a stop loss, it could be a very large loss as a percentage term as well as a dollar amount term. All right, can we analyze? Yeah, okay, sure, Tanushka, of course. Once we get through the slides, as I mentioned, we're going to go dive into TradingView and do some live examples. We can start off with gold. All right, awesome. Yeah, we can do that. We can start with gold, and then any other requests that you may have, right, or anyone else will have. Please do let me know early so that we have time to go through the analysis together. All right, especially for the live charts, because I think that's what's going to be more useful, or probably that's what you're more looking forward to. Okay, so taking a top-down approach, so what are we looking for? We're looking for key graphical levels, horizontal support levels, horizontal resistance levels. We're looking for key trend lines and trend channels, bullish channels, bearish channels, ascending trend lines, descending trend lines. Could look out for potential breakout levels. Also look at moving averages, right? So you can also employ various indicators and to help us. For example, you can be using moving averages, looking for the golden cross, death cross. You can be using a momentum indicator such as the Ichimoku cloud. We can also be using Fibonacci retracement levels, extension levels to help us identify the key support and resistance. And also we can use price action, of course. Right, okay, so zooming into the lower time frames, right? So this is just, I would say, a general guide, right? You don't, I wouldn't say it's fixed in stone, but generally if you are trading on for our chart or H4 time frame, right? Then typically you would use the weekly chart or time frame to identify the overall trend, right? And if you're trading on a H1 or hourly time frame, then use the daily chart. 30 minutes, use the H4. 15 minutes, use the H1. 5 minutes, use the 30, and 1 minute, I didn't include that in, but 1 minute you can probably use the 15-minute chart, right? So this is just a starting guide to help you to trade. So if you're someone who's trading on the 5 and 15-minute charts every day for your strategy, then you should be using at least a 30-minute or the H1 time frame to identify the overall trends, right? Okay, so now let's just move on into trading view. Right, okay, since there's a request from gold, so let's start with that. So right, gold will use the ticker symbol XAUUSD. Right, just let me tidy this up. So we'll start with a clean slate so we can try and identify what's been going on. Okay, so on my chart here, I split up my my chart into two, right? So on the left, I would use the higher time frame on the left, lower time frame on the right. Or you can split it anyway. I split my chart vertically. You can also split it horizontally if you wish, right? Just for me, this is my preference. I prefer to use it on left to right. So left horizontally split. Yeah. Okay. So right. So this left is a weekly chart, right? It's a daily chart. So I'll just go through examples of weekly, daily, then daily and 1 hour, and so on and so forth, right? We'll just move gradually down. So as you can see on the higher time frame, right, I think it's quite clear. When we look at the weekly chart, this is a strong uptrend, pullback, uptrend. Then this was a downtrend, right? Then another uptrend, and then this looks like the beginning of another downtrend. This is what it looks like on a weekly chart, right? So we can see significant swings, right? We can see, we can identify significant swings, which is important. So here we can identify a significant swing low, right? We can see price finding support at 1640, right, before bouncing higher. Then as price went up, it ran into resistance around 1930. So we can see this is another significant swing high resistance. Then as price came down, it found support at 1800. So this is another significant swing low. Then as price came up here, we can see price making. You can see the general what we're trying to identify as major trends, and of course major turning points as well. So this is another significant swing high. Then over here, this is a significant swing low, price finding support around 1825. And now it looks like price has made, in general, another swing high resistance, and perhaps the goal is looking weaker, right? Okay, this is what we have on the weekly time frame. Then when we look across, so okay, so in terms of resistances, let's say, right? Okay, we can also see that in the past, right, this was a pretty decent bullish channel, right? So when I look at it, this is a bullish channel, right? This was a bullish channel. So on a weekly time frame, we can identify that. How can we identify the difference between a pullback and downtrend? Okay, so usually when certain trend lines are broken, right? So when price is still respecting a trend line, for example, that's when we, okay, so let me explain this on the weekly time frame, and I'll do it on a daily as well. So when we look at on the weekly time frame, right? So when price has bounced off this lower trend line here, the lower trend line of the bullish channel, it rises up, it comes here, as you can see here, in 29th of May and 5th of June, for these 2 weeks, price bounced off this level. So when it's pulling back in this scenario, this is a potential pullback, right? This is a potential pullback, price finding support at this lower trend line of the bullish channel. It did bounce higher, but it didn't continue. And then when it breaks out of this lower trend line, we can see that the bullish trend has now been broken. That's when we can quite confidently say that this is now the beginning of a downtrend, which is what happened. And basically, price traded sideways for a while before dropping lower. Similarly, I'm going to get rid of this bullish channel now. Similarly, as price broke out of that bullish channel, or maybe I should just keep it on, right? So it's easy to visualize. As price broke out of this bullish channel and then started to go down, we can also see a bearish channel occur as well, right? You can also see a bearish channel being formed, right? You can see a bearish channel being formed. The price failing to break above the upper trend line of the bearish channel, while at the same time respecting the lower trend line of the bearish channel. Then when price, so along the way, as price is going higher within the bearish channel, this tells us this is more of a pullback rather than the beginning of a new uptrend. However, when price breaks out of this upper trend line here of the bearish channel, this is when we can get a clear indication that we have now the trend has reversed from a downtrend, of course, and now we are in at the start of a possible major uptrend, right? So this is why it's important to try and do a top-down approach, right? And this, of course, works across and all the time frames as well, right? So you can see how over here we can see that price broke out of this bearish channel to go higher to signal the end of the downturn, and then we have a strong move up. Similarly, as price was going higher, right, we can see here generally this is another bullish channel, right? This is another bullish channel where price does seem to have broken out of, right? We can do see here price does seem to have broken out of this bullish channel now on a weekly time frame, and is most likely signaling the start of a new downturn. All right, hi Nicholas. Yes, this webinar is being recorded and it will be uploaded onto IC Markets YouTube page. Usually it's within, but I would say by the end of this week, it should be up, right? By the end of this week, it should be up on IC Markets YouTube page, right? So this is how what we can see on the weekly time frame, right? So if I go back to, all right, most welcome. If I go back to now back on gold and I look at the daily time frame, right? So in October of 2022, till May of 2023, we had a strong bullish trend as seen in the weekly chart. So now let's go onto the day, daily time frame and try and identify the same period, right? So basically October of 2022 into May of 2023. So I'm just going to zoom in a little bit here, right? So this is roughly the same period. And similarly here, we can see that this was a bullish channel as well. So this part here on the left for the weekly time frame is the same as the daily. So you can see price is generally moving up left to right, finding support here before moving higher, and then when it finally broke out of this trend line here, we can tell that this bullish move is now over. But of course, you know, some of you would also be keen to spot that perhaps why not use this as well. Yes, so on this probably shorter time frame, maybe on a daily H4 time frame or H1 time frame, this would have been a pretty strong ascending trend line, right? So price bouncing on this level to climb higher. Then as it retraced, it did find support here for a while, but failed to bounce off it before dropping low. So in the case of a lower time frame on a H1, perhaps then you would say that, oh, this is also now the bullish trend is over. So sometimes it's relative to the time frame that you're analyzing it in. Okay, so I understand the distinction sometimes can be a bit difficult to make between a pullback or change in trend, but it's sometimes it is a bit relative to the time frame you're trading in. All right, hi, there's a question from Desiree. Okay. Okay, so sometimes, okay, when it comes to news related events and trading, right? So again, I would like to use technicals to identify the major trends, but I also like to look at the fundamentals as well. So if there is a major change in the way the fundamental data has changed and is driving a new move or is acting as a catalyst, then I would put on my trades accordingly. So in a sense, okay, when we get to the dollar index, I can explain how I try and use combine technical analysis with the fundamentals as well, right? I'll try and do that as we move into dollar index, right? So after gold, I'll cover dollar index. Okay, so moving on, so on the daily time frame, yes, you can see that this was a bullish channel. So similarly, when we look on the weekly here, 8th of May down to 2nd October. So 8th of May down to 2nd October, right? So similarly, again, we can see that this was a bearish channel, right? This was a bearish channel. And then when price breaks out of this bearish channel, we can see that we can, at this point here, we can be quite confident that the trend has indeed reversed and gold prices are going to go higher. And similarly here, when we look at it on a daily time frame, here this is also a pretty decent bullish channel. This one is not a very clean bullish channel, but you can see that now that somewhat price has indeed broken out of it, and it does look like the bullish trend could be over, right? Okay, so let's now look at this on the daily time frame here, and let's just go down lower into the lower time frames, right, and try and do the same analysis again for gold, and then I'll jump into dollar index. Okay, so now on the left chart, I'm going to go into the 4-hour time frame, and the right chart I'll use the 30-minute time frame. All right, so for the case of gold, we can, okay, sorry, before I do that, just let me expand on the daily time frame. Okay, so what I mentioned, we can use indicators such as the Ichimoku cloud, right, which is a momentum indicator. So basically, just for those who may not be familiar with the Ichimoku cloud, I'll just give a quick rundown. So generally, when the cloud is green here, as you can see at this point and at this point here, this indicates that this typically indicates that we are seeing a strong bullish momentum. Similarly, when we see the cloud turning red and it's a big cloud, then this is telling us that we are in a strong bearish trend, right? So if you look across for gold, right? Okay, it's a good example. So I'm using the daily time frame. I just have Ichimoku cloud. So as you can see, when price is trading above the Ichimoku cloud and the cloud turns green, right, and price is trading above it, this is telling us that we are in a strong bullish trend. So the overall trend is bullish, but of course there can be pullbacks along the way. And then when price breaks through the bullish Ichimoku cloud, in this case, then this is telling us also a potential reversal has taken place. So when price breaks out of the bullish Ichimoku cloud to trade underneath it, then usually the cloud will change color, turning into red to indicate the start of a bearish trend. So when the cloud is red and price is trading underneath the Ichimoku cloud and the cloud is red, this is telling us we're in a strong bearish trend, right? So do take note whenever the reversals take place, right, or the crossovers, rather, the crossovers takes place, like in this case, we had price going from crossing from the top of the bullish Ichimoku cloud to go under, signaling a potential reversal in the bullish trend. Similarly, when we have price crossing above the bearish Ichimoku cloud, this signals to us a potential signal that the bearish trend has ended and we are start on a new trend, right? So this is how we can also use other indicators such as the Ichimoku cloud to help us identify major trends as well, right? So in this case, right, let me just remove this. In this case here, we can also see that there's a bearish channel, right? There's a pretty decent bearish channel here. Let me get rid of this. Right, you can see that this is a pretty bearish channel, but at the same time, we see price breaking out of this upward trend line of the bearish channel, and at the same time, price crossing the bearish Ichimoku cloud to tell us that, to give us a high level of conviction that the trend on the daily time frame has indeed changed and we are very likely to start on a strong bullish uptrend, right? And then when the cloud turns green, right, this tells us during this period here, December 2022 to early 2023, at least the first couple of months, you can see that gold was indeed on a strong bullish upturn, right? And then when price falls into the Ichimoku cloud and fails to break below it, do take note, in a bullish Ichimoku cloud, when price falls into the cloud, sometimes the cloud can offer strong support. So if you see price fail to break through the cloud and starts to actually reverse in the cloud and go higher, that's telling us that it's quite likely the cloud is helping to form support, is helping us to identify a major support zone. Similarly, when price is in this case, when price is rising into the bearish Ichimoku cloud and it doesn't cross above the Ichimoku cloud, but instead it reverses within the bearish Ichimoku cloud to go lower, this tells us that the cloud is actually identifying a major resistance zone, right? So this is an example of how we can use combination of identifying bearish channels, bullish channels, as well as the Ichimoku cloud to identify major trends and reversals as well, right? Okay, so that's what I wanted to highlight. Okay, so coming back to gold, what else was I going to say? I was going to say, right, we're going to use the 30-minute and H4, okay, right? So similarly, I would also use the Ichimoku cloud here. So let's just say we are someone who trades on the 30-minute chart, right? So on the right side, I've got the 30-minute chart for gold. On the left side, I've got the H4 chart to identify the major trends. Okay, so let's just start with the H4 first. I'll do this example, H4 30 minutes for gold. Then I'll go on over to dollar index, right? Then we'll do a currency after this. Right, so I'm just going to expand the H4 chart, right? So we can see here, this is from December of last year, the first start of December till present time. So when you see price is trading above the cloud in general, right? This tells us that, okay, I'll just start from here because this actually, we can see a very significant bullish trend here from 13th of November, right? Okay, so we can see here, right, we have a strong trend line here, right? This is on the H4 time frame. We can see price bouncing off the trend line here on 20th November as well as 24th November. But when price breaks underneath this trend line, this also tells us that potentially on the H4, the bullish trend has ended and price may consolidate for a while before dropping lower, right? So then indeed price did drop lower. It broke through the bullish Ichimoku cloud as well. Then similarly, from here to here, we can see there is a descending trend line as well, right? Price is continuing to fall lower. The Ichimoku cloud has turned red as well, so telling us this is a bearish move here. But however, when price breaks out of this descending trend line here, especially with this strong candle here, 14th December, you can see this was a huge move. This tells us that this is a potential bullish breakout and we could continue to see price go higher. So similarly, when price is going higher here, and we can see that this is again a strong bullish move, right? We can see that price has bounced off this ascending trend line several times, but when it finally broke under here to failed to climb back above it, right? That's when we can tell that this bullish trend here, which started from 14 December till 2nd of Jan, so pretty much about 2.5 weeks, right? About 2.5 weeks of a pretty strong bullish trend. Because of price action breaking this ascending trend line, it tells us quite confidently that price has indeed reversed the trend, and it's going to reverse the bullish trend, and we are very likely to see a bearish trend play out. And similarly here, we can also draw, hang on. Similarly here, when price is making lower highs, remember, when price in this case is making lower highs, right? You see lower highs here. The first high is here, second high here, third high over here, fourth high over here. Price is making a series of lower highs, lower lows. This tells us this is a strong bearish trend. But similarly, when price breaks above this descending trend line, we do have a potential breakout, right? Okay, so that brings us to where price is currently trading. So let's just say I'm a trader, right, who trades on the 30-minute charts. How am I going to identify the current trend? So I'll start with the 4-hour time frame first. Okay, so I'll use the 4-hour time frame to try and identify the overall trend first, right? So on at least on a 4-hour trend for our time frame, pardon me, we can see that price is still sort of trading within the bearish channel, right? So on the 4-hour time frame, I can still see that price is still trading within a bearish channel. It has failed to break above this upper trend line of the bearish channel, while at the same time respecting the lower trend line of the bearish channel. So price came very close to the upper trend line of the bearish channel. And here in this instance, you can choose to play the reversal, right? Price coming very close to the upper trend line here. You can say that this is looks like a pretty significant resistance, because we can see price has failed to break above this upper trend line here on 2nd of Jan, 12th of Jan, 16th of Jan, right? Several times price has failed to break above it, and so far the bearish trend is still intact. So when we see that happening, this gives us a pretty decent level of conviction to tell us that, okay, perhaps a potential short opportunity is on hand for gold prices here. Right, so this is what I see on the 4-hour time frame, right? So this occurred just recently. This is the current 4-hour candle, right? So now we'll go into the 30-minute chart. We'll zoom into that. So even on the 30-minute, oops, hang on, yeah, 30-minute. Yes, now I'm on 30-minute chart. So even here we can see that generally the trend on the 30-minute. Okay, so this perhaps what let me see how I can articulate this much better. Okay, so when we see price running into resistance here, this is 15th of Jan, and if you look here on 15th of Jan on the 30-minute time frame, we can also see that price has failed to break above this resistance level here, right? You can see this is a pretty significant resistance here. Right, so you can see price failed to break above this resistance here before dropping lower, right? As you can see, price is being supported by the bullish Ichimoku cloud for now. You can wait for confirmation perhaps once price starts to break underneath the bullish Ichimoku cloud. This is when you can identify a potential short entry, right? So because we can see here, this is a major resistance zone, and then but we are probably waiting for a little bit more of a confirmation. So when you see price crossing underneath the bullish Ichimoku cloud, then over here, so probably about 2050 is where we can potentially enter a short trade. And you can see from you can see from here, from 16th of Jan onwards, right? Price fell very strongly, right? Gold prices fell very strongly from 16th of Jan 2050 all the way down to about 2005, right? So this is how we can try and help use the higher time frame to identify the overall trend, right? H4 time frame, and then go to the 30-minute time frame. Use that to fine tune our entries, right? Remember we talked about fine tuning our entries and exits. So we use a combination of the Ichimoku cloud and looking at this major resistance zone here, as well as this resistance level here, seeing price cross underneath the bullish Ichimoku cloud to get some sort of confirmation that the bullish trend has ended, and we are going to see the beginning of a strong bearish trend, right? So this is how we use the H4 to identify the overall trend, and then use 30-minute to identify the entry point, right? So then now with price coming all the way down, right, we can see previously price has always respected this lower trend line. So as price is coming down, one of the places you can identify a potential take profit level, as we shorted gold from the top of the channel, one natural place to look for would be towards the bottom of the channel here. So this occurred on the 18th of Jan, right? So then when we go here back to the 30-minute chart, and we go on to, sorry, what was this? 18th, right? Yeah, so 18th of Jan is somewhere here, right? Okay, so we can see at this point here, because we know on the higher time frame that price has always, or not always, price has failed to break underneath this lower trend line several times, right? We can see it here, 3rd of Jan, 5th Jan, 8th of Jan, as well as 11th Jan. So several times price has bounced off the lower trend line to retrace higher. So this tells us that when price comes to around 2005 to 2000, right? This should be a position where I should be looking to exit all my shorts, which is what indeed has happened here, right? We can see price, right, came crashing down hard, but as it approached the lower trend line of the bearish channel, that's where it found support, and indeed it did bounce off this level quite strongly. So similarly here, as price bounces off the lower trend line, right, we can quite confidently say that, okay, now we're going to have a retracement to the upside. We're still in a bearish trend when we look on the 4-hour time frame, but we could see prices climb higher now. So when we go back to the 30-minute time frame, right, we can see that price has indeed bounced off 2000, and it has started on this new uptrend as well. So if you look here, we can use this descending trend line. We can use this descending trend line to see, okay, price has bounced off this descending trend line 18 Jan here at various points to go higher. But then as price broke underneath this ascending trend line, it tried to climb above it once more. If in this scenario, if we did see price climb above it and go higher, that means the bullish trend is still intact. However, in this case, it tried to climb back above the ascending trend line, but it failed to do so, and then it dropped lower. Right, so you can see generally how we can use the higher time frame to identify entries and exits on the lower time frame. Right, so now similarly, with price falling down now, right, this would have been a potential entry point around 2030 to 2040. So that was around here, right? This is 19th of Jan, right? 19th of Jan was here. So okay, 19th of Jan was here. This would have been one point. The second point is here, right, which is 23rd of Jan, right? 23rd of Jan, price is falling quite strongly today as we speak. So similarly, when price is falling here, right, this would, as price came up to this zone, when it's close to the upper trend line of the bearish channel, so around 2030, 2040, this would tell us that potentially this is a potential opportunity to enter a new short position. So on a 30-minute chart, as we see, price failed to break above 2040 and start to fall lower. So during this period here is where we can probably around 2030 would have been a pretty decent entry point for the short trade for gold for today, right? Now, as price is falling lower, right, how can we use the lower time frame to identify the exit point? So as you can see here, we do see a pretty decent pullback support level here at 2019. So as price has reversed off 2035 and is dropping lower, right, where we see it could find support on the 30-minute chart would be around 2020. So if you have been shorting gold, for example, this afternoon or over the last couple of hours, where you can target a potential exit for the short, for your current short, would be around 2020, right? And of course, the next level, yeah, as you can see here, even on the 4-hour time frame, we can also see that this is a pretty decent pullback support level. So as price is falling down, your first take profit level should be around 2020. And of course, if price continues to drop lower, right, if it breaks through this pullback support level here and price continues to drop lower, then of course the next take profit zone should be around close to where the lower trend line of the bullish channel is. All right, okay, so this is what how we can do it for gold. Let's go on over to dollar index, right? So similarly, right, 34. Okay, let's just do a daily analysis first, right? Let's use the daily chart to get the overall trend. So similarly, we can see back in okay, so if I zoom out, you can see how on the daily time frame, the bullish Ichimoku cloud has acted as a support, right? Support for prices. We can also see a pretty strong ascending trend line, but when price breaks this ascending trend line and price also breaks underneath the bullish Ichimoku cloud, this tells us that this super bullish uptrend in the dollar index has finally broken, and it's quite likely we're going to see price drop lower, right? Which is what happened here. And similarly, we had some retracements to the upside. Price failed to convincingly break above the Ichimoku cloud and actually was sort of generally trending lower, right? And also, if I were to use a descending trend line here, right? If I were to draw a descending trend line, right, you can see that this descending trend line was only finally broken convincingly in mid of 2023, so in August, right? So you can see that this was a pretty strong descending trend line, right? Price failing to break above this trend line in mid-October and October, early November, and even here we can argue in middle of June of last year as well as July, price did come close to this trend line, but it failed to break above it. But when it did break above this descending trend line, it started a new strong bullish move, right? So similarly here, we can also see a very strong bullish move here, right? Roughly, if I want to, I'm trying to capture the points as best as I can. So if we zoom in a little bit here, right, you can see price bouncing off this level on 27th of July, 31st August, 21st September, and then here is when 10th of October, when it breaks underneath it, then it tries to come back above the ascending trend line again, but it fails to bounce higher, and that's when you can see that, oh, okay, since that this ascending trend line, sorry, has been cleanly broken now, it's quite likely we may see prices reverse for the dollar index and drop lower. All right, there's a question, if trade this in 30-minute target will be the 4-hour channel bottom. No, for gold, if you're going back to gold, I'll just quickly highlight it here. Just going back to gold, if you're trading on the 30-minute time frame, I would be targeting this level here at 2020, right? If you're using the 30-minute chart to trade, your first target should be the pullback support at 2020. Okay. All right. Let's go back to dollar index. Right. So we can see how by identifying trends and bullish channels, this is actually even, yeah, this is also a bullish channel here. Right. We can also see this clearly, quite clearly. This is a bullish channel, right? And when price breaks below the lower trend line of the bullish channel or this ascending trend line, that is quite telling us that, okay, on the 4-hour time frame, we do see this trend breaking lower. So then I can use the 30-minute time frame to identify short entry. Similarly, when you're still in the bullish channel, right? When you're still in the bullish channel, you see price bouncing off the ascending trend line, right? That's when you would use the 30-minute time frame to identify or to fine-tune your entry levels for the longs, right? You'll be looking for to go long when price bounces off the 4-minute bounces off the ascending trend line on the 4-hour chart, and then we use the 30-minute to help us fine-tune the entries. Okay, so this is now going back to daily. Right, so let's try and do the analysis for dollar index on the daily time frame where price is currently trading. So right, so since July till October of last year, we saw a very strong bullish move. Now since end of October till early Jan, we saw a very strong bearish move. It does look like it has been broken, right? So we can see there is a bearish channel here, or there was a bearish channel rather. Oops. Where's my channel? Yeah, here we go. Right, there was a pretty strong bearish channel here. Right, when we look at it on the daily time frame since 1st of November till 9th of January of this year, you can see price has respected the lower trend line of the bearish channel and at the same time respected the upper trend line, especially on 13th of November and 12th of December. However, in the second week of January, we can see price clearly breaking out of this upper trend line of the bearish channel, which signals to us that we do have a potential bullish breakout, right? So we now, at the same time, we can also see a pretty strong bullish trend here as well, right? Now, when you connect the dots, right here, we can see this ascending trend line. Price has indeed bounced off this ascending trend line here today quite clearly. We could see the dollar index move higher. So at least on the daily time frame, when you're able to spot the trend reversals, then you can fine tune the analysis. by going into the lower time frames. So now let's go into the 4-hour time frame for dollar index. Okay, so before I do that, Desiree had a question about how do we use the fundamentals or the news related events. So part of the reason for the dollar index to be falling sharply in the last 2 months of December was a combination of lower inflation figures, so CPI data, core CPI data, PPI data, they were all trending lower. When you see CPI data, PPI data trending lower, that means the Federal Reserve does not need to be so aggressive with its hiking policy, right? So that means the dollar index is likely to lose value. So that's what we are seeing here, like October, November. We saw inflation data in the US starting to trend lower quite significantly. That causes, although the Fed was not cutting rates, but because the market was already anticipating that the Fed is going to become less hawkish, then that's why we saw the dollar index sell off. And especially after the Fed meeting in the first week of December of last year, the Federal Reserve came out with a very dovish statement and press conference, which actually triggered, which added to the downturn, right? So that's why we see the downturn. But however, what has happened in January for the first couple of weeks, we have several Fed officials coming out over the last few weeks, pushing back against the aggressive interest rates, aggressive cuts in interest rates. So what we are seeing is the market getting ahead of itself, expecting very aggressive interest rate cuts by the Federal Reserve this year. However, now we are starting to see a lot of Federal Reserve officials starting to push back against this perceived interest rate cuts and saying that we're likely to keep holding rates at current levels, and we're not going to cut so soon. Perhaps they'll start cutting maybe in the second quarter of this year, or maybe even in the middle of this year, right? So what we're seeing is a shift in market expectations of what the Fed is trying to do. So that is why we are seeing this strong bullish move in the dollar index. Right, okay. Right, of course, Mustafa, do drop your questions here. That's what the Q&A box is for, right? No worries. Just give just drop your question and I'll try and answer it as soon as possible. All right, okay, so coming back to the analysis on the dollar index. So let's just use the 4-hour time frame to identify the trend. So when we look at it here, right, we can see we have a ascending trend line here. That's what we mean. We use the lower time frame to fine tune the analysis. And also there's probably a bullish channel as well, right? Yeah, there is a pretty decent, not the best bullish channel, but it is a pretty decent bullish channel here, right? So you can see price first time as price bounces off 102.20, then we can draw the trend line, right? Then we can draw the trend. Of course, we need price to react off a certain level before going higher. And then this time we can quite clearly see on the 4-hour time frame, price has indeed bounced off this bullish trend line. Even on the 4-hour time frame, we can also see that this is a pretty strong support level, right? 102.07. See, you can see price bouncing on this level several times, which tells us, oh, okay, price has failed to break below this support, telling us this is quite a significant level. And then we have the intersection of the overlap of this horizontal support level. Plus now, as price moves up from 102.13, we can also see that a trend line being formed, which is what we see here as well. 23rd Jan, price bouncing off the lower trend line of the bullish channel. So then if you go onto the 30-minute chart, right, when we see prices bounced off this low at 102.98, so pretty much 103, and as it goes higher, right, so this is the level here, 103.98, and as it goes higher from here, we are looking to go long, right? We can see price finding support above the bullish Ichimoku cloud, finding support at the lower trend line of the bullish channel on the 4-hour time frame, and as price is coming up, especially with this candle here, the current 4-hour candle, this tells us that, okay, potentially we've got a good chance to get in on a decent entry for the long side, because we do see the bullish trend potentially is still intact. That means about 103, 103.10, right, would be a good level to enter, go long on the dollar index. All right, okay, Mustafa, All right, we're coming towards the end, but could you just elaborate a little bit more? Need some knowledge about the breakout. So could you just be a little bit more specific when it comes to breakouts, right? When I look at it on the 4-hour time frame, right? What we're trying to do is establish major trends. So in this bearish channel, you can see price failing to break above this trend line. Now, if I fine tune it on the 4-hour time frame, it should be like looking like this, right? Price has come close to this trend line here, and then finally it finally is broken and goes higher, because we can see that price is broken out of the upper trend line of the bearish channel. Price also found support at this horizontal level here at 102.07, and then as price moves higher, we can also see this ascending trend line form as well, right? So we have using the combination of the bullish channel, this horizontal support, and then of course the bearish channel to help us identify the potential breakout, right? Um, then similarly, right? So in current context, we can also see that here there is a shorter, oops, hang on. There is a descending trend line here as well. For example, right? We can look here, right? When we look at it on the 4-hour time frame here, right? Price is making a series of lower highs, but now it's rising strongly toward it. So if price breaks above this descending trend line, then yes, it could tell us that this indeed is going to give us some sort of confirmation that we have a strong bullish move on our hands, right? And this is how we can use the combination of bullish channel, bearish channels, horizontal supports, and of course using multi-time frame analysis to help us identify trends, and then use, why can't I adjust this properly? Oops. And then use the lower time frames to help us identify the entries and exits. So although I've just showed you examples for the 4-hour for the longer term and 30-minute for the shorter term, you can of course translate this into the lower time frames as well. So if you're trading on the 1-hour time frame, no, sorry, 1-minute time frame, for example, if you're a scalper, you're trading on a 1-minute time frame, you should be at least using the 15-minute time frame to identify the overall trend. So let's just quickly do that. So 1 minute on the right side here, 15-minute on the left. So if we look at the 1-minute time frame, right, we can see quite clearly this is we are in a strong bullish channel here on the 1-minute time frame. Price is also trading above the bullish Ichimoku cloud, and then similarly on the 15-minute time frame, we can see price has actually broken out of this. Right, this was a, you could probably even argue this was a bearish channel, right? This was previously a, okay, not the best bearish channel. I'm just going to delete that, but you can see this was previously a pretty strong bearish trend, right? There's two descending trend lines, I would say here. I would say there's two descending trend lines. One is this one here, and it's starting from 23rd of Jan, and the second descending trend line is from 23rd of Jan as well. So, oh yeah, of course, 15-minute time frame. So you can see for this trend line, price breaking out of this descending trend line, price also found support on the 4-hour bullish channel, then price breaking out of the 15-minute descending trend line, which then tells us as a scalper, right, I've got an opportunity to go long here. So this is where it occurred at the 1600 hours, 33rd of Jan. So 1600 hours, 23rd of Jan is, wait, is this 1600 hours? What is this? 16, oh yeah, this is 15. Where is it? Wait, am I on different time? Oh, okay. No, okay, that explains it. I'm on different time frames here. Okay, so I'm going to set this right. Okay, now this will add up. 23rd of Jan, 800 hours on the 15-minute time frame. So when I look at it here, 23rd Jan, 800 hours is around here, right? So 800 hours, right? So this tells us here at this point, when the breakout occurs on the 15-minute chart, right? On the left, I've got the 15-minute chart. We see price breaking out of this strong descending trend line. And here, this tells us, okay, potentially we've got a scalping opportunity to go to the upside. All right, this is how we can also use it on the lower time frames as well. All right, so I've come towards the end of today's webinar. I'm just going to launch a poll. I'll truly appreciate it if you guys can give your feedback. And also do look out for all upcoming webinars by IC Markets for this week. And of course, this webinar is being recorded and will be uploaded onto the YouTube page in due time. Perhaps since today is Tuesday, I believe at least by Friday, by the end of the week, it should be up onto their YouTube page. All right, thanks everyone for tuning in today. Hope this has been a great this was a great session for all of you. Do take note, we've got tomorrow we've got the Bank of Canada with their interest rate decision, and we also have the ECB coming up with their monetary policy statement on Thursday as well. So we've got two more central banks announcing making major interest rate decisions, announcing major interest rate decisions and statements. All right, so do take note of that. It is definitely going to be market moving for the Canadian dollar as well as for the euro. All right, thanks everyone for tuning in, and have a great trading week. And do look out for all upcoming webinars by IC Markets for this week as well. All right, thanks guys. Thanks everyone.